Welcome everybody to another one of our educational sessions, this time on auto homeowners insurance education. I'm Mike Heben, the Chief Operating Officer here with Level Financial. And I'm going to bring in our keynote guest speaker here in just a moment. We'll start with just a couple of ground rules for everybody. First, we want to let everybody know that we'd like to keep it interactive. So if you have questions along the way, you can use the Q&A function on the webinar at the bottom of your screen, should be at the bottom of your screen. Type in your question there. If it's appropriate, I'll interrupt Mark in the middle of the presentation and ask him the question and see if we can answer it live. Also want to make sure that everybody knows, first of all, that Level Financial and Walsh Duffield have no affiliation with each other whatsoever, except for the fact that they're a trusted referral source for us. We will send them folks that are looking for help with insurance, but there's no commissions or anything. We don't sell insurance here at Level, so you can rest assured that you're getting an objective presentation from Mark here. We're also recording the presentation, so we will send it out. We'll post it on our YouTube channel. We invite everybody to go onto YouTube, look up Level Financial, and actually subscribe to our channel, and you'll get all our content and the different videos that we put out there on a regular basis. So without further ado, let me introduce Mark Garvelli with Walsh Duffield. Mark started his career as a personal lines underwriter with Aetna in Rochester, New York in May of 1987. He held several positions with Aetna that ranged from underwriting to marketing until 1992. And it was the acquisition of Aetna by Travelers that prompted his move to the independent agency side of the business. And he is now the Vice President of Personal Finance with Walsh Duffield. He's responsible for the management of over $30 million in business that includes automobile, homeowners, excess liability, valuable articles, flood, recreational vehicles, and other insurance products for over 12,000 customers across the U.S. On a personal note, Mark is the father of 3 boys, ages 35, 28, and 22. He hardly even looks old enough to have children that old. And he enjoys spending time on Sundays watching football with his boys and also vacationing together in the summer. So without further ado, I'm going to hand it over to Mark. Mark, I'm gonna have you unmute there. I think I had you muted. There you go. And take it away, Mark.
Sure. Well, thanks, Michael, and thanks for the introduction. I wish my own personal portfolio reached the $30 million level, but we're still a work in progress on my end on that. But anyway, thank you for joining me. This is meant to be a very insurance 101 course. I just want to educate you on some of the coverages that you will find in an auto policy, a homeowner policy, especially when it's related to the liability, which is really going to protect your assets. You're spending a lot of time and energy and hard work accumulating assets, and Level hopefully is doing a good job if you're a client of theirs, helping you navigate through and reach your goals. And I would hate to see you stumble or hit up a roadblock because of an insurance product or unawareness that you have for a liability potential claim where you're not adequately covered. So I'm going to take us through some slides here real quick. Again, there's the disclosure. I think Michael already kind of hit that. And again, the purpose is give you a little better understanding of the policies, help you make informed decisions, and again, make you aware of some of the coverages that you may or may not have and that you potentially need. So I'll start out with the automobile protection. And what you'll find on your auto policy is the limits of liability as a section. People generally will have either a split limit of liability or a combined single limit of liability. We typically sell the combined single limit, and let me give you a little bit of background on both. So a split limit, where you see a $100,000 per person, $300,000 per accident, $50,000 in property damage. Those are your coverages for any one particular loss. So you're a little capped if there's an injured party any one individual where they may sustain injuries of more than $100,000, this split limit is only going to give you that $100,000 and a total of $300,000 per accident. And then the property damages, whatever it is you're hitting, whether it be another automobile, a building, a property, whatever your car may do damage to. Where the combined single limit, it's more of a, if you think of it more as a blanket, you can use that $300,000 any way you like. You can use it all on one person, the entire accident or property damage. So it doesn't necessarily cap you like a split limit would do. And here at Walsh Duffield, we would typically sell you $500,000 of a combined single limit. It's usually pretty good underlying adequate limit to be carrying for any accident that you could be involved in. Another portion of the auto policy is the personal injury. That's protecting you for your injuries if you are taken to an emergency room. And oftentimes when you go there, they'll ask you right out the bat, is this a work-related injury, an auto-related injury or not? If it's clearly an auto accident, this is the coverage. This is where the hospital will send the bills for your immediate injuries. So again, it's going to reimburse you. There's a minimum of $50,000 that comes on every New York State auto policy. You can buy out of state coverage and you can buy up to $175,000 of that protection. We sell without question $175,000 worth of coverage. It's not that much more to go to. And if you think of the rising cost of healthcare and those types of expenditures for the immediate care that you're going to get, the 175 is definitely where you want to be. And of course, if you're sustained permanent injuries and you're not at fault for something, that's where the other party's liability will come into play if you're going after more of a recovery or permanency of injury. So personal injury, think of that. It's also commonly called no fault coverage because it doesn't matter who's at fault in the accident, your policy is going to respond to cover you for those losses. A real important part. This is one that you want to pay a little more attention to. It's called uninsured motorist coverage. Uninsured, underinsured motorists would be protecting you for those people out there that may have low limits of liability protection or no insurance whatsoever. So let's say that you're in an accident, your injuries are permanent in nature, could be lower back, could be neck, could be loss of use of a limb, and you're out to sue somebody and you go after the responsible party and they have minimum liability limits. You can go under your own policy to cover the gap. So a quick example would be, let's say the party that was at fault, you can see from the screen on the right, has $50,000 of liability. You on your policy have $300,000. So once you've sued and recovered the $50,000 from them, you can go under your own and start collecting an additional $250 if your injuries are substantial and it warrants that sort of a recovery and reward. So a real important part, I think one of the most important parts of the auto policy is it's protecting yourself against others. So think of it that way. It's a real important coverage to have. And again, at Walsh Duffield, it's $500,000. And we would give you the $500,000 of uninsured, underinsured motorist protection. The collision, it's a pretty easy one. This is the physical damage portion coverage on your own vehicle. So it comes into play if you're striking another object or someone hits you or leaving the scene of an accident. So it's the damage to your vehicle as a result of a collision. Typically, you'll have a deductible for this portion of the loss. $500. Let's see, if you're driving any type of vehicle that's newer in nature these days, it's just a damage to a bumper is going to be $3,000 or $4,000 with all the safety features that are incorporated in the bumper. If you think about it, sensors for backing up, cameras. I mean, it's no longer a simple repair. You can easily come into a pretty high priced repair job, even if it's just a fender bender these days. So the collision coverage is an important part to have. And I even carried on an older car. I have a 2007 Lexus that my youngest son drives, and I carry the comp and collision on that, just to, again, go after some of the repairs that we're talking about here. The comprehensive coverage, that is if your car is stolen, if there's a fire, if you happen to hit a deer, vandalism, a falling object, hail, that's sort of the protection that you're going to see under the comprehensive coverage. Again, it's usually associated with a deductible. And most of those deductibles have what's called full glass. So if you are driving down the 90 or any of the throughways around the area or anywhere, stone kicks up, hits your windshield, cracks the windshield. If you have full glass coverage, there is no cost for the repair out of pocket to you. So make sure your policy has full glass, and I can guarantee you probably most of you have that protection. Again, deductibles, here's what we're talking about. Again, that's your out-of-pocket expense. So it's the standard, although that standard is $200, it's more around the $500 deductible range these days. And for the most part, we're seeing more and more clients go as high as $1,000 deductible. You don't really get too much savings after that unless you're driving exotic vehicles of value of over $100,000, or they're giving you some pretty good credits for going higher than $1,000 deductible. So let's say your vehicle is worth $1,200, or there's $1,200 worth of damage. Again, you take out your deductible, and that's what you would collect from the insurance company. So it's just your out-of-pocket expense. Any questions at this point, Mike, that anyone may have thrown in about automobile coverage and sort of how important it is for the liability, especially when we're looking at underinsured motorist protection at this stage?
No questions on the board yet. No questions yet.
Okay, great. Then I will move into some homeowners and renters coverage at this point. So what you're typically going to see on a deck page is coverage A, B, C, D, E. And coverage A would be your dwelling, B is other structures, C is personal property, D, loss of use, and then E is your personal liability protection.
Mark, we have a question.
Oh, we do.
All
okay,
right.
let's go for it. Okay.
The question is, do you guys work with multiple insurance companies for your quotes?
Oh my gosh, that's an amazing question. So yes, Walsh Duffield is what's called an independent agent. So we do work with multiple carriers to find you the right price and coverage that you need. Whereas a direct writer, let's say if you're calling Geico Direct, you're only going to get a Geico product. They have no other options. Sometimes if you're being non-renewed or canceled from a direct writer, they really don't have other options because it's the only company they can go to. So it's a little bit of the advantage of having an independent agent in your corner. We do have options that we can go to if something should happen. So hopefully that answers the question. So moving forward with homeowners insurance. The homeowners insurance is based on a replacement value, not a market value. We'll get the question asked, I couldn't sell, although not in these times, I couldn't sell my house for $300,000. Why are you insuring it for that much? My house is only worth $150,000. It's because it's what it would cost to rebuild that house with like, kind, and quality of material. So especially in older homes, where you're seeing some ornate structures and some hardwood and all those wonderful things that we see in the architecture of an older home, you're going to see replacement values of those homes be a lot higher and sometimes exceed market values. Again, we're in a crazy time for market value. So the gap between replacement and market value has definitely shortened through the pandemic and the shortage of inventory of homes. But that's really what the basis of the insurance policy is on the homeowner side. It's really critical now, even if you haven't had a review in a while, for the replacement cost of your home to make sure your home is adequately insured. Like any other industry right now, we're feeling the pinch from the supply chain, labor, all those things that go into the cost of rebuilding a house. We're finding that a lot of homes may be underinsured at this point in time, and we want to make sure that the values are correct. There are provisions in policies that require co-insurance of 80% typically. So let's just say for round numbers, you have a home that's 100,000, you need to carry 80,000 in protection to meet the co-insurance and avoid penalties at the time of a loss that could come out of the loss settlement. So insurance to value, very, very important, especially in these days. And then there is an inflation factor built in on your renewals. You may notice your home going up year after year. It's because of the inflation factors that get applied to try and keep your coverage A at the value or the number that it should be. Other structures, typically just a 10% that they automatically build into the policy. You may not have a structure detached from your home, or you may have a structure that's valued more than what it's insured for. We can always increase the other structure value, but you're always going to see something there. Personal property, again, it's all your stuff, things that you would take with you when you move. That's a percentage off the coverage A dwelling as well. Again, you may increase that coverage or lower it to a certain level, depending on the company you're with, especially if you're scheduling separate items. You may have a rider where you're putting fine arts and other parts of your contents, insuring them separately, which would allow us to lower the coverage of your other or your personal property. Loss of use is a real important one too. This is if you have to be out of your home for an extended period of time, this is the coverage that they're going to allocate toward you to live in another home, or rent an apartment or a hotel or wherever you need to go for the period of time where your home's being repaired. Really comes into play if there's a substantial fire loss. I can see these claims going on for a year while things are being settled and being repaired. So you could run into some pretty substantial loss of use dollars. So you want to pay attention to how much you have there. And then the most important thing for while you're accumulating your assets is your own personal liability. This is what's going to protect you if in the event that you're sued. So outside of an auto accident, anything that could happen on your property or off premises where you might be liable for something, this is where your protection is coming from. Slip and falls, we've all seen the commercials. You could probably quote the phone numbers of 10 different attorneys because you hear them every day on the television, radio, or up and down the 33 as you're driving. The personal injury, this is where this protection is coming from. Again, Walsh, Duffield, $500,000 is pretty much the minimum that we go to when we're selling this type of a policy to protect you. And again, it's more for asset protection too. We don't want to run into a situation where you don't have enough and then they're coming after personal assets. This is why you have the insurance. And again, the deductible, your out-of-pocket expense, just the same as it would be for an auto. So if you're having damage to your roof from wind, which we've had several wind events. They seem to be more and more frequent these days. Could be shingles coming off, could be siding, could be any sort of damage to a home from any peril that the policy would cover. Your deductible comes into play, and then the insurance settlement happens after that. Replacement cost coverage on your contents. This is replacing new for old. You should absolutely make sure your policy has replacement cost. You don't want an ACV settlement at the time of a loss. So you got a 10-year-old piece of furniture and something happens to it under a covered peril, you're going to get new for old. So you want to make sure that you have that in place where there's not depreciation at the time of the loss settlement. So, and I would bet that most of you, it's pretty standard that most companies are selling replacement cost contents, but you want to make sure at least that you do have that. A little bit about contents coverage. You do have some policies that will be specified perils, and then you have policies that are more open in nature. Specified perils states this is what we cover you for: fire, lightning, windstorm, hail, theft, vandalism, blah, blah, blah. Open perils, it's covered unless it's excluded somewhere in the policy. So a quick example is you're painting your house inside and you're up on a ladder, let's say, and the can of paint falls, spills all over your couch and carpeting. Specified perils, spillage of paint is not covered. Open perils, it's not excluded, something that would be covered, subject to the deductible. So it's best to have open perils policies at Walsh Duffield. That's pretty much all we would sell and recommend as far as a coverage goes. Water backup, and we're getting into some additional things that you need to add. Finished basements are pretty popular in Western New York. I don't know why, but our basements tend to flood with some regularity. Some pumps malfunction, sewer backs up through drains and toilets. Those coverages can be, those damages can be quite expensive. Restoration companies just to come in and dry you out and cut away drywall to prevent mold is going to run you $5,000. So, I mean, if you do not have a water backup endorsement to the policy, typically you're not going to have that coverage. That'd be a huge disappointment at that time of loss. And then we do see this a lot, especially this time of year when snow's melting, things are thawing, you get rainstorms. If the sump pump does malfunction and you start getting backup, especially in a basement that's finished, you can run into some serious damage. So you want to make sure that that coverage is included in your policy.
So Mark, typically speaking,
Yes.
how much of additional cost is a water backup rider or whatever you would call it on a policy as maybe a percent of the overall policy? I don't know how you could characterize it.
Sure. So typically what we see is, and you can buy different levels of coverage, 5,000 being the minimum. They'll typically run you about $30 to carry that coverage. We tend to sell, especially if you have a finished basement, $15,000 to $20,000. You might be in the $50 to $75 range to add that coverage on, but it's clearly well worth it if something were to happen. And again, like I'm sure most of us out there, I myself have experienced water backup in my basement twice in the 20 years that I've been there. So it's, yeah, it can happen, especially if you're not at home, you're not checking. So that stuff happens. I'll get into some miscellaneous coverages too. These are really sort of the meat and potatoes of everything, especially when we're talking about umbrella coverage. So the umbrella policy goes above and beyond the liability limits that are on your auto policy, your homeowner policy. You may have a boat policy, recreational vehicles. It's an added layer of protection. So they start at $1 million. You can also get added some coverage or that underinsured, uninsured motorist coverage. So that $500,000 of protection we were talking about on your auto policy, we can add another layer of $1 million on an umbrella to protect yourself in the event that somebody causes serious injury to you, that you could have $1.5 million for your injuries as opposed to just the 500,000. I myself have a $5 million umbrella. I carry $1 million of excess uninsured, underinsured motorist coverage to protect myself. Really what it comes down to is it's where your comfort level is based on your assets. Again, for the protection, at minimum, $1 million umbrella for a house and a couple of vehicles will run you maybe $150 to the $200 range. That's an annual premium. That's pennies on the dollar to add another layer of protection. And again, if you're seeing any of those personal injury commercials where they're running the ticker tape on the bottom of all the settlements that they've had in the millions and millions of dollars range, it does kind of make you think a little bit about that extra layer of protection, especially in Erie County. It's a very litigious county, part of the state. We are, from what I'm told from our claims handlers at our companies, the second largest settlement county in New York State. So if you think about that, it's just a tad behind the Bronx in those areas in New York City, where awards coming out of Erie County are in very generous, to say the least. So an umbrella policy, I even recommend it for younger operators that are on their own. You could be in your 20s, may not have a lot of assets. You think, what do I care? They can sue me. I don't have any assets. Let them come after me. It's not just what you have today, but it's what your future potential earnings and what you may have in the future. You would hate to start out a young career with a garnishment of wages because you didn't have enough insurance when you were younger at the time of a loss. So even though you might not think you have anything today, it's what you might have tomorrow that potentially could be at risk. So again, for $150 to $200 for $1 million of extra protection, well worth the money. And that's
Quick
one of our
question for
biggest
you
questions.
on that, Mark.
Yeah.
Quick question. So when it comes to umbrella coverage for automobile accidents and things like that, how far does the umbrella extend? You know, for example, if you have children that are on your policy, or is it household? Like, what's the cutoff there, and how does that work?
So it's protecting you and your family members in the household.
Okay.
So it could be youthful operators. It could be your adolescent teenage son or daughter who is Instagram texting messages of a nature that could be against a teacher. We've seen these come up where they're, you may be calling out a teacher in a way that you shouldn't be, and now you're sued for defamation of a character or whatever. So it's pretty broad coverage. It's just not thinking about an auto accident injuring somebody. It's some of the stuff that might go behind the scenes these days with younger children, and what's happening on those Instagrams, Snapchats, Twitters, all those things that you're pushing out there on social media. You got to be careful. It's also worldwide in that you could be in a foreign country renting a car, and your umbrella would respond if you have adequate underlying limits for the cars that you're renting, foreign or domestic. So you're getting that layer of protection too. So it doesn't necessarily have to be a car your own. It could be a car that you're renting. And again, when you're looking back at the auto policy, one coverage that I probably should have mentioned is the rental reimbursement. So it's renting a car while your car is being repaired for a covered loss. We're seeing those prices escalate just because of the supply and demand. Again, you may find that you only have $30 a day with a $300 limit or whatever. We're trying to get you up to $75 a day, 3,000 max, those types of things that'll cover you for the time that your car is being repaired. And those repair times are lengthening because of not being able to get material in on time, or at least a time frame that we've been used to in the past. So, but again, the umbrella, really important. Jewelry, we're looking at riders for things like that. You do have limitations in homeowner policies for jewelry. $5,000 is usually all that the company will pay on a piece of jewelry where it is stolen, which is the most common cause of loss. So theft of jewelry, $5,000. If you've got a wedding ring or something of that nature of $20,000 in value, is something that you would want to schedule separately on its own on an agreed value. So if something were to happen, you get that amount without any questions asked, and no deductible at an all risk sort of coverage. So it's jewelry, it's furs, it's watches, it's fine arts, all those things that have values typically that you want to schedule separately. Highly recommend a valuable articles policy where you can schedule those things separately. Flood, it's we see this all the time, even though you may not be in a flood zone per se. The chances of experiencing a flood can be, if you listen to what they're telling you from the National Flood, they'll tell you that most of the areas that experience flood are the ones that aren't really in a zone where you'd be prone to it. So flood insurance, if you're in a preferred area, it's not a real expensive policy to pick up, and it does provide some pretty good coverages that your homeowner's policy will exclude from you. There are no homeowner policies that are covering flood. They're all excluded, and you need to purchase the coverage separately. Service line coverage. This is a new one. Service line coverage provides the protection for the underground piping or utility lines. So you think about some drainage lines, is what we're seeing now. You've probably gone down your neighborhood and seen at least 1 or 2 yards dug up over the past couple of years. It's because they've had an underground pipe probably collapse. And if you have mature trees and those roots are growing, they can get into the pipes, they can clog them, and they can eventually have them collapse. And then that's where you've got to go in, dig it up and repair it. The town does not own the pipe. You own it from your house to the street. Until that connection is made, you're responsible. So for pretty minimum credit, probably around, I would say we're selling this coverage between $35 and $50 for $15,000 of coverage. If you think about what it costs to dig up, excavate, put the new pipe in, we're seeing these claims come in around the $7,000 range. If the pipe is going under a driveway and now you're digging that up for a sidewalk, you can easily get to a pretty expensive loss if you do not have this coverage. And again, this is one that we're pushing out there with some frequency. A lot of people have been jumping on the utility line and underground piping coverage. So highly recommended coverage again. Identity theft, we include these. Again, this helps you restore your credit. If your identity is stolen, expensive process. When you get this coverage, they give you the consultation to help you get back to normal. So it's well worth it. If anyone's ever experienced an identity theft, it can take a long time to get things back to where it should be and back to a normal state. So we put that on a lot of policies too. Again, that's a real just brief overlook of what we've got going on in the insurance. We could take deep dives in, but I'm happy to keep you on the channel for this long listening to insurance. But again, I'm happy to field any more questions at this point, and keeping in mind that liability protection is strongly encouraged, especially as you're building assets, for sure.
Okay. We do have a question here. One of the questions are, what are the limits on the identity theft coverages? What are the minimums? What are the, I guess the maximums, but what are the limits?
So a lot of these companies now, it's around the $50,000 mark for the protection. If you run into that kind of expense with attorneys and wherever you're using to try and rebuild your credit, that usually goes quite a long way to help you get back to where you want to be.
Okay.
It's pretty minimal. A lot of it gets packaged in with other coverages too. So it's not really one that's sold on its own. It's usually encompassed with a few other coverages that they package together.
Another question really is, I think sometimes when people are shopping for insurance, obviously the average person just isn't up to speed on how to really read what they currently have versus maybe what they should have. So when you talk to people that are looking for insurance or looking for information about insurance, are you doing a review of what they currently have and saying, okay, here's what you have, here's what maybe you might want to consider having?
Yes.
Or is it more people come to you saying, here's what I want? How's that work when you take on, somebody who might be a prospective a buyer of insurance?
So when we're looking at somebody on a new business basis, we definitely look at what they currently have, and then we make recommendations or what we think that they should have in terms of adequate limits. We don't by any stretch try to match or do better on price than what they have. If it works out that way, awesome. But we're really more in the consultative arena when we're in that mode. And we want to make sure that we're giving you something that you need. And if it's price is important, don't get me wrong, but it should not be the focus of what you're purchasing. Name your own price and all that stuff. When you're out there doing that, and you can get to a price point any way you want, you can get there. It's not a healthy way to do things though. So we will educate you and steer you where you should be. I've walked away from deals where people want us to do business, but they want lower limits. I can't in good faith do that. So I will politely say, stay where you're at. Yeah.
And a quick question, going back to the water backup insurance. Do those policies require certain things to be in place in order for them to extend the coverage? Like when I first saw the title on that, it said water backup. I'm thinking, okay, do I have to have a backup sump pump system even to get this coverage? Does it require that, or?
You don't. it doesn't really require it. It helps you. And for your own peace of mind, you should have a backup system. I do, especially after the first loss when I was a new homeowner and didn't know too much. But once I experienced it, I absolutely, at first I had a battery backup and now I have one that's on gravity, and it works even a little better. And if the power goes out, it doesn't matter. So a battery backup only lasts as long as the battery will continue to pump the water out. So
here's another question. How often should people be re-looking at their auto insurance? I know that,
okay.
a lot of people will say, hey, we really should be shopping this and checking it out. What do you guys recommend when it comes to looking at auto insurance?
So for our own customers, we routinely tell them if they want an insurance review to call us. I wouldn't recommend shopping your insurance every year, because here's why. I could save you money moving you from the company you've been with for, let's say, 5 or 6 years. The company I'm putting you with will, without doubt, go through a period where they're going to be increasing their rates. Sometimes they price themselves at a price point where they're trying to get market share. And like clockwork, they will have rate increases once they have you in-house. And now you've thrown away the loyalty and rapport that you've had with the company you were with, going to a new company. I mean, it's at some point, it's absolutely worth it. To save $50 to $100 is absolutely not worth it. It's not
Especially when they
a
make you
good
go
move.
get a photo inspection of all your
You
cars.
gotta do all that stuff over again. You could get an inspection on your home, and now they're out there and they find, oh, you got to fix this, you got to fix that. Oh, replacement cost is more than what you were with before, and the savings could end up being costing you more. So it's a little dicey. I like when we're seeing moving you from one company, significant savings, $700 or $800 range, and we're making sure that we're matching coverage or maybe even putting enhancements on there on the move. Yeah, go for it. But if people are calling in, and we, believe me, we get this, and I understand it, I get it. But my policy went up $25. I think it's time to take a look around. Again, if I'm not saving you on that sort of a range, honestly, it's just not worth it, because I'm telling you, you'll be fine for a year, but on a renewal, it's more than likely you'll be paying a little more on the company I just moved you to. If you just would have stayed put with the company you were with, sometimes things will be fine. So we try and recommend some price saving things. There's a lot of cool things that companies are coming out with outside of just the normal take a defensive driver class, that sort of thing. There are a lot of telematics is coming into play where you can put in devices that monitor your driving. Not everybody likes that. They feel maybe an invasion of privacy. I can tell you that the data is not really sold off, or they don't do much with it other than trying to determine a better rate for you. And we're seeing this become a little more popular. We're trying to get New York State to open up where they'll allow an app on your phone as opposed to a plug-in device on your car. An app on your phone would be awesome. That could kind of monitor how you're doing. They usually look at just a 90-day window. After the 90 days, they lock in rates and they don't go back and look. So, I mean, we see savings 15, 20% range on people that want to go that route. And most of our carriers now, there must be a lot of value in it, that companies are seeing reduction in loss ratios on the auto side if they elect to do that sort of a telematic program. So I encourage that. But yeah, through the review, we're looking for ways you save money with your existing carrier. But at the end of the day, if it's a move that has to be made, yeah, for sure, do whatever. For sure.
All right. Well, it looks like we don't have any other questions. So I'll just leave this with everybody here. First of all, we'll put it out on the YouTube channel. It usually takes 24 to 48 hours for us to get up there. There's 2 ways. If you want to ask individual questions, you can always, of course, if you're a client here at Level, you can contact your advisor, or you can send us an email at invest@levelfa.com. And we will reach right out to Mark and forward your information to him so he can reach out to you. Or if you prefer, you can reach right out to Mark. His information is right on the screen there for you, phone number, email. So that's it for tonight. Thanks everybody for coming. Mark, thank you very much. Great
I was happy to
presentation.
be here.
Everybody have a great evening. Take care.
Thanks, Mike.